if it's not the end of short vol trade, at least it will be time for a real hard look into these products.
Yeah, and for a lot of people, this was their avenue, this was their channel through which they were able to participate in a short vol trade for retail. And one of the most popular ways just been taken away from you by virtue of XIV getting shuttered. So that's one thing, but I think we're still looking at, right now we haven't had a normalization in the VIX curve. If you look at the second to first month future spread versus the S&P 500 active contract, that's what it's tracking today, and we're trying to get this normalization in volatility, and it hasn't worked yet. So we're kind of still working on normalizing, and it's clear we're not there yet.
Yeah, and it's clear also that billions of dollars will have been lost when we look back on this event, and possibly there'll be more shutdowns, not just of products, but of firms. Joe, how will we look back on this event, do you imagine?
Well, I mean, I have to imagine that an event like this is good. We had just talked so many months in a row. Like, when's the volatility going to happen? Why are the markets more volatile related to headlines? And then you get an incident like this, which is so sharp and such a deviation from the norm. I don't know. It's hard for me to imagine us going back to like quite the level of complacency that we saw before. No, it's very likely that volatility is going to settle down, and maybe, as to Luka was saying, we'll see the VIX curve resembling something normal. But whether it could go back to where we were like, last November or December, in which it was just so placid, seems a little bit hard to believe.
But Joe, already large funds, hedge funds had been slowly positioning for an eventuality like what happened yesterday.
Yeah, totally. And I think I'm sure in the coming days ahead, we're gonna find out about some funds that made an absolute fortune yesterday, and
the VIX elephant.
Right, and we're gonna find out about some funds that got destroyed and may one day, I don't know, destroyed. But I'm sure all of that's going to come out. But this was, for many traders, and as Luke was saying, this was kind of a known risk. There was like the pennies ahead of a steamroller trade, which every day you could make money until the day you get flattened.
You get flattened, exactly. Now, the VIX is, a crude instrument. It always has been, but it's been an instrument until recently, when we all started thinking, well, is the VIX even useful anymore?
Sure.
What is the VIX telling us? It's up and it's down. We're back at 31. What exactly is it telling us?
Well, I actually pulled up the chart, G#BTV2094, that Luke was referencing yesterday about the spread between out-month VIX futures and the current one. Maybe Luke can describe this huge move down that we're seeing here and what it means.
Yeah, so that's basically what we got yesterday, and we had that kind of spread blowout. This was the pennies you were picking up when it was the other way, when the spread was in positive territory. Volatility was so low that it was hard to make money betting on it going lower, but you were still able to make money just knowing that that spread existed. Now that it's got blown out, it's just what it's saying is that the market's view is that fear is still very much what's immediately in front of its eyes. Fear is not an event 2 months down the road, fear 3 months down the road. It's what we're living with right now.